Well, hello guys, and glad to have you on board again. Today we are going to make an intraday update because, damn it, I've just seen a hell a lot of BS out there into YouTube, whether that is the craziest good old moon boys giving some irrational targets, or the bear guys talking about the fact that yet another tulip bubble is on the verge to come for Bitcoin's participants and stuff like that. So, as we always made it clear, and that is not something new as of today's update, I don't nearly think either of these parties are right. I think they're actually both wrong, and that whatever is on the verge to happen is most likely something that will be assessing both of these probabilities until one actually takes over. Which one is likely going to take over? I've always made it clear, I still think the upside potential far outweighs the opposite probability. That doesn't mean the other one doesn't show up. I mean, it can still play out. It's just that statistically speaking, technicals support more upside potential due to the fact that we've assessed the probabilities that these Wyckoff accumulation structures are certainly very psychologically oriented, but they also very well risk manage the probabilities to go to the downside. So the fact that the support has been worked out for so long and so painfully for those who were not aware of psychological mismanagements and so on, so those who cracked down and sold their coins on supportive areas, well, might very well regret that now. So you need to understand one thing. First and foremost, the Wyckoff pattern is still at play. We very likely are at the end of it, but that doesn't mean we can't play out the last part of it, which is supposed to be, in psychological terms, the sign of strength, which is supposed to be kind of a short-term range that we exit to the upside before confirming that the reversal has occurred. So I think the current nearby areas in Bitcoin prices are definitely the ones in which we might expect the sign of strength range to build up. For multiple reasons, the technicals around the nearby area is pretty much quite hesitating. Lots of things are pointing to the nearby areas, whether that is average valuation, whether that is the fact that we have moving averages out there in here on shorter time frames, whether that is the fact that this is pretty much 50% of the big range we're setting in. So this is really a dense technical area. Most of the, at least rational enough, not to say good traders out there, have also assessed the same things. Of course, when we get to mid areas, lots of stupid traders get to make irrational calls. They tend to say, we're going to go there or there. Well, probably we will, but let's make it rational. The broader the market perspectives are, the likelier we are to stay there. That means people are not agreed on price direction. Well, neither do I, and that's exactly what I think it is. Upside potential, sure, but definitely not now. I'm not buying in below resistances, even though I truly believe that prices will be higher in the future. What matters is timing, and this is what we're going to be talking about today. When a range is about to build up, this is definitely not the appropriate time to buy. Most importantly, this is the appropriate time to look for market hesitation to materialize in price structures, so-called ranges. So all of what we have in front of us in here into the daily chart suggests that the bulls definitely have the stick on their hands. Sure, that doesn't mean the bears have lost the battle. We have multiple problems to deal with in these Bitcoin structures. The first one being we're the hell out of a long and painful accumulation pattern. So those who bought the lows are asking for significantly much bigger gains than the ones we see right now. But there also have been quite some short-term speculation, and these guys might want to lock the gains. So think of it that way. Short-term traders might lock on some gains. Long-term traders will wait for further gains, but they are far more patient and definitely do not expect their target to be met in less than a month. So we definitely have a conflict situation out there. Shorter traders locking profits, long-term traders not buying anymore. That leaves us with one remaining thing. Who's willing to buy the market at current prices? Well, that gives me two options. The first one would be the FOMO usual guys who will be able to buy whichever prices that is. I don't know what can drive such a thing, but I don't see the motive right now. I see more of an hesitating market structure, And that would definitely be the sign of strength. Everyone is quite more positively oriented than bearish, and that's also what I think. But that doesn't mean we can avoid ranging a little while. By ranging, I mean breaking a goddamn trend line. So the only one I have available now into the daily chart would be this one. So first things I'm pretty damn sure about, we're going to break this guy. I don't know how long it's going to take because once again, the accumulation pattern and the Wyckoff psychological structures can take as long as they want. All that matters is that we reach out the psychological mind state of the market so we can trade accordingly. So the first thing I want, the pace to be shifted, not reversed, not anything near bearish territory, but just changing the pace. That is what I want, okay? Breaking this trend line. So first and foremost, we're going to put it into the multi-time frame analysis, okay? And we're going to extend this line to the right side. Okay, and then we switch to shorter time frames to try figuring out which time frames might be driving these consolidations. So the 4-hour chart is where we find the moving average. So I would say this is definitely a likely outcome for the range to build up. But I would also assess the fact that in order to break this trend line, we're pretty damn far away from the latest supportive prices. So diving below 50% will very likely be what I mean as a buyable entry for this range to build up, but that doesn't mean we will lock on the most attractive prices for buyers because we've already broken cycles. That's one of the reasons why I would say buying right below 50% context is where we would like to get in, putting a stop loss right below these things. Of course, that's the beauty of it. These levels are dynamic. This one will close at the end of this week, which means next week will give us updated levels, not pretty much higher than the ones we're currently experiencing, but might be a bit higher, like 40K or something. So I would say that depends on how fast we trigger the consolidation. Looking at how bullish the market is now, I doubt we will get a harsh reversal. But let's get to be open-minded for every possibility. So unless we had a huge reversal, I don't intend the buyable levels to be reached out this week. I intend some kind of a regular type of consolidation, just the market doesn't buy resistance, and we slowly retrace towards supports without too much noise, but it is just that those who will buy the dip too soon will probably have to wait. Okay, so last piece of hesitation for the market. We all agreed to the fact that there are some more upside potential rather than the opposite direction, but I don't mean we buy resistances now. We buy the breakout of these ranges, which means we need to see the range first. Okay, so we're tracing to this trend line, breaking below them, possibly going to take 2 weeks because I expect the first week to slightly retrace, possibly try to attempt a bullish upside move before the end of the week, and I suspect a second downside leg might occur later next week, which will dive into buyable territory. Applying the same rules I'm talking to you about right now, so that if we ever go for a rapid downside move, you'll be willing to catch the appropriate prices, even though I think they might be available by next week, with an updated level, of course. Okay, so 4-hour would be the reference, but if I say we buy below 50% context without entering the support context, that means this is not the appropriate time frame to trade on. That would likely be an H1 time frame range, because remember, the strategy tells you one thing: you always buy in context. So buying below 50% is great. That means we have early trending behaviors, but that certainly don't mean we can buy outside of the regular strategy rules. And look at this. The 4-hour moving average was going pretty damn this way, okay? On H1 reference chart, in here, the moving average is upside orientated, though I think that this one will lock us above these levels all week long, supporting the scenario I just shared before. I doubt we'll get a harsh reversal because the moving averages still support prices. Quite more of a downside orientated consolidation. I don't know which pace would be like, but I suspect that the first upside move reaction will come out of this nearby moving average and support context. Not as a trend follow, because remember, we're not yet trending, so don't be dumb enough to apply trend follow patterns. This might be a breakout, but this is more of a short squeeze. So I do not apply trend following patterns now. So I suspect a range could build up in here, which means we need to see a third range boundary rejection in here, and then we'll see what the fourth range boundary boundary look like? Is it a lower low point with a trending signal in here? In that perspective, experienced traders will be able to anticipate buying the 4th range boundary. Others will wait for trending signals on the 4-hour reference charts. Okay, so what I expect here is building an H1 time frame reference range, and once the range is matured, for those who know how to do it, they will be able to buy the H1 signals, though on the lower time frame as this reference chart we're looking at now, and other less experienced traders who will act as potential trend follow will wait for this range to mature and will look for potential trending signal below these 50% context levels near the trend channels. Okay, so wait for this trend channel to reverse, and then you will find the buyable prices slightly later. Which prices it will be, like I said, depends on how fast we consolidate. I will plead for the second option, which means probably more like next week. That also means if you are too aggressive, well, you're probably going to miss the shot. Understand that until now and probably next week, there's not going to be that much to do but to look for arbitrages. That's what I'm doing now. That's what I planned, and that's what I explained. That's what I explained into last weekend's update that, if my memory's right, it's been released on Friday. So since Friday, I've just been putting things into motion, which means I targeted some assets that would worth an arbitrage. By arbitrage, I mean I'm no longer trend trading. I'm not longer favoring one side rather than the other, bull or bear. I'm going both sides every time I'm triggering a trade, and I'm placing trades for the exact amounts, which means I'm buying one altcoin and I'm selling the exact same amount in dollar value of Bitcoin, okay? So that's what I do now for the simple reason, and the one I explained into the trading view updates, which is I think the dominance is headed to the downside, and that's exactly the earliest move we've had so far. I still suspect that we have more downside potential, not to the end of the world, but I think pulling back to these support contexts, if we can see we have a severely downside orientated moving average facing a supportive context. So I definitely think that here as well some hesitation will show up, but this is where the dominance will be cheap enough to consider Bitcoin taking the lead again. That's exactly what we've assessed. Bitcoin sends the signal, it pushes the dominance right back up, and then Ethereum confirms, and then lower cap altcoins will eventually validate or at least retrace to some more average values. That's the reason why I've been targeting those that were lagging, most importantly Atom and Cardano. These are the ones I have put a trade on as we speak, and there are also a couple other ones that I intend to eventually risk manage in the portfolio as well. Ripple seems like a bit of a hard trade to catch on right now, so this one feels a lot hesitative, and as you can see, lots of noise. So even though I like this reaction out there, I'm not really willing to get into this one. So way too shadowy of an area for this one to come. The next one I'm looking for is Monero, but the thing is, Monero is also as shadowy as it is, but I still lack of a signal into this one. Okay, meaning that I think this one could eventually retrace a bit lower to get below the 50% context, and as of right now, this is the area in which I'm definitely looking at Monero versus Bitcoin. All of these are always arbitrage. If I buy one Monero, I'm selling the same exact amount of dollar value of BTC, so that if Bitcoin retraces, maybe Monero will do as well, but normally Moneros would retrace less than Bitcoin should do. So in this overall picture, normally for a limited amount of time, and like I said, if the dominance reaches out the target area, I'll close all of these trades. But I just play arbitrage as long as Bitcoin goes along the plan, which is we've reached out to some more neutral territory. We might make some kind of a pose. We should build a range, as we stated, should be H1 timeframe orientated. So here is the whole risk management of my current strategy. As long as we build H1 ranges, I will time 2 entries. These 2 entries will be, the first one is more speculative, so I'm sparing some cash and I'm using limited amount of funds to trigger this one, because the lowest risk taking would be on the 3rd range boundary. So I expect the first downside leg not to be the most rewarding one, but just the one to validate the scenario's outcome. I expect and would like to see this H1 context to be reversed. If it is, then when the third range boundary shows up later on, like I said, I expect it to be pretty much more like the second part of this week. Okay, when the third range boundary shows up, of course, if it shows up, this is where I will trigger, or at least very likely trigger, the second step of these trades, likely Monero, I guess, and possibly some others like Solana, who is more like a trend, and so on. Okay, I'll eventually consider Ripple, but like I said, man, Ripple, I don't really much like this thing, specifically with all of the regulatory context we're having right now. Even though that's a topic we're going to dive into, I will spare that of today's video. So 15 minutes in, I think that's more than enough. We've spent most of our time talking about technicals. There will be some other videos eventually, if I have available time, to manage the psychological errors that could be triggered during this range. But to be plain simple, just don't be dumb enough to trade now. Every time you want to buy something, make sure you find the weakest outperformer that you will place bearish bets on. Make sure you buy just as much as you sell, and don't go trades until we have a mature range. Likely H1 time frame will be the reference. Bye guys.